course, one of the bigger risks with Taiwan Semiconductor Manufacturing Company are the geopolitical risks. Its concentration in Taiwan and the threats from China in that region have investors concerned. Now, whether that's valid or not remains to be seen, but the valuation is lower because of that risk. If Taiwan Semiconductor was a US based company, the valuation would be higher to be sure. So Taiwan Semiconductor is taking steps to address those concerns, and that'll be the topic of this video, is the geopolitical, the geographic expansion of Taiwan Semiconductor manufacturing, how it's going, what it could mean for investors, and so on. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. The management saying that we were able to pull ahead the production schedule of our first fabrication facility in Arizona. The first fabrication facility already entered high volume production in the fourth quarter of 2024, utilizing N4 process technology with a yield comparable to the fabs in Taiwan. So that's good news. The company ahead of schedule in its first facility in Arizona, and the yield is already comparable with that in Taiwan. We'll talk a little bit more about the margins and how it compares with that in Taiwan in just a little bit in this video. So the plans for the second fab and third fab in Arizona are also on track. These fabrication facilities will utilize even more advanced technologies such as N3, N2, and A16, which is a variant of the N2, and that's going to be based on their customers' needs. The company is getting billions of dollars in incentives from the US government to bring manufacturing into the United States, and this will alleviate some investor concern about the concentration of Taiwan Semiconductor in a geopolitically contentious region of the world. They're also expanding into Japan. Their first facility in Kumamoto has started volume production at the end of 2024 with very good yield, and construction of their second fab, specialty fab, to begin this year. So we've already talked about 5 new fabrication facilities, 3 in the United States and 2 in Japan, that Taiwan Semiconductor is building. Earlier in their financial conference call with Wall Street analysts, Taiwan Semiconductor said that they were increasing their capital expenditure budget in 2025. They spent $30 billion in 2024. They're going to spend $40 billion in 2025, partly to build out these new manufacturing facilities outside of Taiwan. But they're still investing in Taiwan. They continue to receive support from the Taiwanese government, and they are investing in and expanding their advanced technology packaging capacities. But I think here's what investors are most concerned about. Overseas fabrication costs are higher for everyone, including Taiwan Semiconductor and all other semiconductor manufacturers. So this means that these facilities in Japan, in the United States, they're going to come with higher costs, and so margins are going to be lower. Remains to be seen if the company can pass along those costs to its customers, since it's the customers that are looking for that diversification, since it's the customers that don't want to take that supply chain risk with Taiwan Semiconductor. That'll be interesting to see. I am expecting Taiwan Semiconductor to increase pricing sometime in 2025, maybe in the back half of 2025, depending on how competitors, how semiconductor manufacturing supply overall, the industry demand for anything outside of artificial intelligence. Right now, demand for anything related to AI is soaring, but anything outside of AI, demand growth is very, very low single digits, maybe mid-single digits in some categories. So the company's N2, which is their newest technology, is well on track for volume production in the second half of 2025 as scheduled. And the N2P, which features further performance and power benefits on top of N2, will support smartphone, HPC applications, and volume production is scheduled for the second half of 2026. So part of their investments in research and development, some of it is going into these new manufacturing facilities. Some of it is going into existing facilities, upgrading the technology to newer generation technology that offers more performance and lower power consumption. And this is especially important in these newer data centers that are getting built optimized for artificial intelligence. So the A16 is the product that's best suitable for high performance computing. Volume production for this is scheduled for the second half of 2026. So one of the bigger questions that Taiwan Semiconductor gets asked is, with all of this geographic expansion, can Taiwan Semiconductor produce its most innovative technology outside of Taiwan? Can it produce the latest generation technology in these new manufacturing facilities, or all these new manufacturing facilities for the older generation technologies or the ones that are not on the cutting edge? And the management team answered those concerns, saying that the initial phase of ramping up always comes from the fabrication facilities that are closest to our research and development department, which is in Taiwan. So, in that sense, we want to ramp up the same kind of technology in the US, but that practically is a little bit difficult since, right, the people, the research and development people are in Taiwan. If they want to ramp up that technology in the United States, that would be difficult, practically difficult, right? Imagine having to fly your whole team over to the United States to check on some iteration of the process, have them go back and then they fix it, and then the team has to come all the way back. Whereas if you're close to your research and development team and you're trying to ramp up that technology, in the morning, the R&D team can go visit, and then in the afternoon, after lunch, they can go and visit again and keep getting updates and iterations and more feedback and positive feedback loop. And it's easier to ramp it up in that way. So it's not that they don't want to do this in the United States. They want to have as much diversification in their supply chain, creating the most innovative technologies in various parts of the world. But practically speaking, I don't think they have the capabilities just yet. They may develop those capabilities, but they don't have it just yet. Thinking about the cost, the management team said that they're going to expect 2 to 3% dilution in their gross profit margin from their overseas fabrication facilities for every year over the next 5 years. That's a big decrease. And that's understandable. That's what everybody already assumed, right? That the reason why they've focused on manufacturing in Taiwan is because the costs, the supply chain, everything is there, and the costs are much lower. These expansions are going to hurt their margins unless they can pass along the cost to customers, which it doesn't look like they're planning to do, because they're saying, look, our margins are going to be lower about 2 to 3% every year for the next 5 years. Their gross profit margins, thankfully, are very high. They're close to 60%. And the company still says longer term, they expect it to still be above 50%, but they do foresee lower margins as a result of these expansions. But I've been saying that's worth it. It's worth it. It's worth it to give up some margin because they've got plenty of margin to work with to lower the risk, because that's the biggest reason why investors, but more importantly, customers are not leaning into Taiwan Semiconductor more. It's because of those supply chain risks. If they were to diversify those risks, the business itself can improve. They can attract more orders, increasing orders from existing customers. And then investors also, with the lower risk, may be willing to pay a higher valuation for Taiwan Semiconductor stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.